Hi, everybody. This is Gary Dean, and this is our free weekly new video report for Wednesday, March 23rd, 2016. I have not gotten one of these out in a while. We've been really busy with some back end stuff that we're doing, and on top of that, the markets have been really boring, so I didn't want to just be sending stuff out that wasn't really going to give you any information. There's a lot of reasons why the market should have been going down. It kept grinding higher, but now we have some things that are starting to line up again, and I figured I would give you guys a video and let you take a look at what's going on. So let's get started. At Sentiment Timing, we believe that human beings in the markets are irrational. There's always going to be an irrational element at work, and that's what creates market opportunities. Now, we find these irrational opportunities through Woody Dorsey's proprietary sentiment database, as well as his technical timing indicators, which predict when the markets are going to reverse, and then we try to back them up with regular technical analysis. So the thing is that nobody is going to be 100% correct, and as you're going to see in this video, our most recent call wasn't. It was a good trade at first, but then it kept going in the direction that we didn't think it was going to be going. And I'm going to go through all that. But really, what we try to do is let you know whether it's safe to be buying or selling or looking on the short side. And like I said, not all of these are going to be 100% correct, but if you noticed in a lot of the outlines that we've had, these predictions that Woody's made has been for well over 1,400 points, and that's been since September of 2014. And so they're right a lot more than they're wrong. But there's times that they're going to be wrong, and they're picked up on pretty quickly. And it is, what is usually told is either to move to a very small position or to the sidelines until things straighten out again. So we use the time aspect. Those are the actual technical timing indicators that predict when the markets are going to reverse. Those are Woody's things, and then we try to back them up with sentiment. And typically what happens is that when we have a technical turn date approaching and sentiment is at an extreme bullish or bearish reading, that is when the markets reverse, and then we try to look at price and technical analysis to figure out where the markets are going to reverse. And really the way it works is when you see euphoria in the market and nobody really believes that the markets are going to be going down, you get very high bullish readings, and typically that's when you want to start fading this move. When you get everybody looking for a crash and nobody wants to be in the market, you get capitulation, and that's when you want to start looking to buy the markets. So sell at euphoria, buy at capitulation. So this is going back to our February 9th newsletter. And what was actually the call was the call was going back into January, where declines ideally into February 8th, followed by strength into February 25th. So this is the 8th. We had a bounce and made a slightly lower low here, but from where it was right around the 1825 level. We had the huge rally going right into this is the 22nd, and this is when we had an extreme bullish reading, and Woody had put out take profits. So it was still 110 point gain profit that we made on it, and we actually got the big move down. So everything looked like it was in line for what was going to be playing out, but then we got the big gap higher, and things kept going. So this was right here. The whole move down was correct. This is where things got messed up, and honestly, this is where Woody said, your stop should be around here. We shouldn't take them out, and things have just gone higher. But it doesn't make even though we've had this nonstop move up, it didn't really make it safe because we could get a reversal at any time. And the reason why is, we're getting these extreme bullish sentiments. So everyone's bullish on the markets again, and we are approaching some technical turn dates that we're anticipating the market to move lower. So if we take a look at the regular charts, this is just another aspect of it, and this is the S&P on a daily chart. Sorry about that. Hang on one second. Okay, so this is the S&P, and this is a daily chart here. And what you notice here, this is going back to September 28th, 2015. This is the time period. So from left to right, this is the time, this is the distance. All I did was copy and pasted it and put it here. And if you notice, we are at the same exact pattern. Does it mean we have to go straight down? But it's possible. We have this trend line that's right here that is also the bulls have on, they're watching right here. They weren't able to break through it. And really what the bears have to do is push it through to 2017. If they do that, then we could get this little reflex test of the highs again. But most likely after that is when we're going to start the deep decline. Now we're very overbought on the on our momentum indicator. We have bearish divergences, and this pattern is identical. And if we go back, we have these extreme bearish readings. So as much as everybody is, not really believing this market's going to go down, a lot of people are starting to call new all-time highs. There's a lot of warning signs that are saying don't buy into this. And something that Woody's been saying for going all the way back to last September is that we're entering a bear market, and nobody's really going to understand that we are in this bear market. And all this is a counter trend bounce off of an interim bear market. And the reason why it's still considered that is we have never taken out. So the highs were actually made all the way going back to May of 2015. This bounce never took out the highs. This bounce hasn't taken out these highs. So overall, we're still in a downtrend, and we're still in a bear market, and that hasn't changed. And everybody had the same feeling when we were here, is that we were taking out the highs, and this is when the S&P was all the way up at 2121. Here we're at 2050, and people are calling for new highs, but it's the same exact pattern that we saw. So I would be careful. We're not saying that we have to crash, even though that is part of the overall view is of the bear market, is that we still have another leg down that's going to be coming, and that's what Woody is going to be eyeing down moving forward. And when things start to get very volatile, like we're anticipating they're going to be, you get these 100-point, 200-point moves in a matter of days, and this was the kill zone that Woody predicted a month before, and we're going to start getting these calls back again. So it's one of those things that the markets are boring right now. Our original call wasn't there, but things got a little tricky. But now we're getting into these kill zones again, and they're not on any of our reports yet, but they're now starting to get there. We've burned off the extreme bearish sentiment, and this is what we're going to be eyeing down. So if you want to be prepared for this stuff, and you want to know when they're going to be coming, because you can make boatloads of money if you're short when the markets are going down 200 points. And you can make a lot of money on the counter trend bounces, because we go both long and short on this. And remember, this was the 8th that the low was supposed to come, and the whole short was supposed to come from up here. So it was a great short move. It was a great long move, even though it could have been a lot better if we just hang on to them. But the markets aren't always going to do what we expect, and that's why I give you this, I say that we're not going to be correct 100% of the time, but even being wrong was still a 100-point, profit on it. So anyway, that's all I have for tonight. I would definitely say be careful. You want to know what is coming down the pipeline, because if you're not, you're going to wake up and be blindsided. That's just the way this market's been going. Anybody that does subscribe, I'm giving you a free membership to my Markets Path membership. I do nightly video reports, morning notes, email trade alerts, and we do have a trade room. So if you are interested, you can use the coupon code that is attached to the top of this, and that's only going to be I think available for a day or two. I'm not exactly sure. Somebody else puts that on. But with that, until next week, have a great long weekend, and I'll have good luck trading.